Everyone's talking about controlling their own keys. Everyone's talking about controlling their own destiny. Everyone's talking about getting money off of exchanges. Good morning, good afternoon, and good evening to those of you around the world. Welcome to the Defiant and Cent Galaxy DeFi update, where we come at you every Monday with DeFi news around NFTs, the decentralized finance landscape, CeFi, TradeFi, and everything in between. This is, of course, brought to you by the Defiant, the essential information platform for the open economy that you can find at thedefiant.io. And Cent Galaxy, your one-stop shop for the crypto market, a fully decentralized, all-in-one crypto gateway where you own your keys and your crypto. So starting off with the top of the news, of course, everyone is talking about FTX and the subsequent downfall. We learned more, or of course, all of the news began to explode about 7 to 10 days ago with rumors of FTX's insolvency. Of course, a balance sheet was leaked by CoinDesk that appeared to show a massive hole in FTX's balance sheet. Eventually, we began to learn more about FTX's relationship with Alameda and loans denominated in FTT, which was FTX's native token. Of course, there was some wonkiness with Binance and CZ because they owned about $2 billion worth of FTT around a week ago at FTT prices. That was when FTT was about $22, now sitting about under $2 right now. So greater than 95% drop for that asset. But all in all, FTX's bad loans to Alameda ended up in the collapse of FTT and the devaluation of those loans. And of course, a lot of those loans were made using customer deposits. So there's kind of the circular fashion of how the money disappeared. There's still a lot we do not know. Of course, we will likely see exchanges not make loans in their native tokens anymore. But of course, the fact that FTX was loaning billions of customer deposits out to partners and related companies is not good and is what led to the downfall of FTX. So we still are learning exactly where the money went, exactly how the transfers were initiated, how everything was hidden. There's rumors that FTX that SBF had a backdoor built into FTX to hide and obscure various transactions and holdings. So there's still a lot of rumors going on right now. Of course, the company has filed for bankruptcy. They are allegedly under supervision by the Bahamas authorities. The SEC has launched an investigation. The DOJ has launched an investigation. The bankruptcy process has started. So this is going to be an ongoing process. The Voyager bankruptcy process has taken more than 6 months so far, and that was moving relatively quickly. So this is kind of, if you're looking to what to expect, look at previous bankruptcies. Mt. Gox may be an interesting one because of all the other things floating around. But of course, this is not the first crypto bankruptcy. So the silver lining for those that are affected is hopefully the lawyers and the powers that be, understand the process and are able to move things in a relatively quick fashion to return assets to customers. But based on the potential $8 to $10 billion hole that is rumored, many assets may never be able to be reclaimed as we see it now. So of course, continually ongoing process, but we will of course continue to monitor this week over week and update everyone who watches the show accordingly. So the next piece of news is FTX Friday night. So of course the bankruptcy happened mid to late last week, I believe Wednesday or Thursday. And then on Friday evening, as the world was, easing into its weekend, FTX was reportedly hacked. Now, we still don't know everything around this hack, but I'm going to show you both of the wallets that the money was transferred into and give you a little bit of information about exactly what happened. So this is the hacker's wallet, the alleged hacker. Now, basically I'm going to walk you through the entire process. But what happened was FTX and FTX US wallets were both drained into this address. At its peak, it was worth over $400 million. This address began transferring assets to BNB, Avalanche, Polygon, etc., and it was selling assets en masse for Ethereum. It was selling stables, it was selling crypto. Many transactions were taking place. Now, what also happened was assets eventually also began to sift into this wallet that was worth, I believe, about $350 million at its peak. Now, the interesting thing about this wallet is this wallet created multi-sigs. Hackers rarely ever create multi-sigs because why would you create another step or roadblock for you to move the capital around? If you're someone with bad intentions, you're not going to make it harder to move the dirty money, so to speak. So this wallet set up multi-sigs, and rumors began to fly that this wallet was a black hat hacker address, and this wallet was a white hat hacker address, likely FTX reclaiming funds during the hack. So as we understand now, of course, there's still lots of information that we do not know, but the FTX and the bankruptcy council has admitted that there was unauthorized transfers occurring. They've not officially really called it a hack, but that's what everyone else is calling it. And they are working on recovering said funds. So as we know it now, this is the address that FTX retains capital. And of course, if we actually look at it, it's FTX token, it's BOBA, it's TLM, it's GMT, of course, millions of dollars of assets that can definitely be sold, but these are low market cap assets. Of course, FTX had its own, the FTT deployer was minting FTT en masse. So really not going to be able to get a whole lot of money for the FTT token. BOBA, if you sell all of that, you're not going to get the full 30. GMT, Serum, Toncoin, CHZ, so FTX really ended up getting the short end of the stick on this hack as well, because the hacker ended up making off with 200 million ETH, DAI, BNB, PAXG, DAI, USDT. And of course, some of these addresses and capital has been frozen by helpful parties in the crypto space. So, they're not going to be able to make off with all the money. And of course, this money is still sitting in the wallet. So the question is what's going to be done with this money? Of course, who did this hack? There's, of course, plenty of rumors of an inside job. These are unconfirmed. We do not know. But, if everything's happening right after they declared bankruptcy, the whole team is still together. This is a multi-sig type of transaction to be able to pull funds from these parent accounts of FTX, FTX US. So there's lots of speculation around exactly what happened. We don't have answers. And of course, FTX, SBF, and all of his friends and colleagues and people who ran FTX and FTX US have not said anything yet. We had a cryptic message from SBF last night on Twitter that just said what, but we have not heard from them, which is increasingly worrisome in relation to everything else. So the final piece of news is, of course, since FTX was lending customer assets and had a massive hole, there started a big movement to have proof of reserves for centralized exchanges. And because everything's on the blockchain, what they can do is they can link their reserves publicly so that you can see how much money they have and where that money is going. Now, of course, the backfire headline refers to crypto.com moving millions and millions and millions of ETH around on chain without notifying anybody. Of course, 320,000 ETH sent to Gate.io at one point. And then, of course, the crypto.com CEO had to make a tweet, announcing what happened with the transfer and clearing up everything around it. Of course, it seems that it was not to cover Gate's deposit limits, or deposit numbers for their own audit, as the audit was the snapshot of the audit was taken before the ETH was sent. But it's still very weird to see crypto.com moving money around, and other exchanges have been doing this too. A few exchanges have said that they actually held money. Huobi held money on FTX. Now this isn't entirely unusual because sometimes exchanges will hedge on other exchanges, but to be moving such massive amounts of money around, to be taking such risks, you're going to see a lot of exchange practices change moving forward as customers, become a little bit more intelligent and aware of what's going on around them, and also wanting to make sure that their reserves are safe. Why would you want to trade on an exchange where you feel they're being nefarious? Of course, there's plenty of options. FTX was a very large and massive player in the space, but other players will be poised to take that space or that market share, I should say, and will likely be able to use trust and proof of reserves to their advantage. But of course, anything done first time, anything introduced into any market is obviously going to either have issues or receive backlash. In this case, Crypto.com felt both. Crypto.com CRO is actually dropping. We should probably pull up, just to give you an example of what happens, especially if you have a native token on your exchange and people feel that you're not being trustworthy, they will sell those assets. So of course, everything started selling off with the FTX debacle, but CRO is down 50% since Sunday. Since Sunday, November 6th, which is just over a week ago. So down 50% over a week, down 56% from peak to trough in that same time frame. So very interesting stuff going on in the market. We'll be continue to closely monitor the FTX hack and everything around it. But it's definitely, it's not looking good, unfortunately, for customers now. But of course, we will have to continue to assess and figure out exactly what is going on as we hear more from FTX and others. As you can see here is their headline for the Chapter 11 bankruptcy and all the headlines around FTX and removing assets from an exchange. So moving to the actual DeFi landscape, what is going on? Well, predictably, DeFi TVL has dropped a little over 10%. So, November 6th, just over a week ago, DeFi TVL was just under 56 billion. It is now at 42 billion across all chains. That is a drop of just over 10% in about a week. Now, of course, looking at Bitcoin, just as a bit of a benchmark, how far are we down? We're down 25%. We went down 25% peak to trough. We're down 23% overall. DeFi having a 10% drop is actually beating the benchmark of Bitcoin by a full 10%. Now, we'll comparatively just do this to Ethereum, since basically ETH is the DeFi ETF, if you will. So ETH is down 25% from the high on where is the high right here? Yeah, this is the high on Sunday, very early in the morning. We're down 25% from that price. So DeFi also beating Ethereum by the benchmark, if you are looking at Ethereum as the benchmark, which is very positive to see. Now, of course, these 7-day changes, very large changes for MakerDAO, Lido, Aave, Uniswap, etc. Unfortunately, Curve taking the biggest hit, as I believe FTX, not exactly at FTX, but SBF and Alameda were very much utilizing Curve to their benefit. So seeing a lot of money pull off there. But, we definitely want to see these 1-day changes at least inch or stay the same. We definitely just don't want to see things decreasing. If we can see some sort of formation, and since we traded very heavily between 40, well, we didn't trade very heavily, but we had a lot of volatility between 40 and 48K or 48 million. That implies that we should continue to bounce between 40 and 48 if we are going to continue to hold this level. Else, you see these extreme run-ups and there's not a whole lot of, quote unquote support to hold us. Now we're doing kind of TA on total value locked, but the whole world does work in a bit of a TA landscape if you know how to use it. So basically, we want to see it hold at 40 billion TVL, which is the low back in the spring of 2021. And so, of course, we're seeing some growth on some ETH based services, but DeFi is definitely taking a big hit, as is the rest of the market. But again, we're only down about half of what the percentage that Bitcoin and Ethereum and many other assets are down. So DeFi is holding up a bit stronger. I am using air quotes because it's relative, and this is all, subjective at the end of the day. But to see DeFi holding up stronger is definitely a good sign as we move forward into assessing the landscape. And of course, the narrative right now, if you go on Twitter and you keyword search DeFi, everyone's talking about DeFi. Everyone's talking about controlling their own keys. Everyone's talking about controlling their own destiny. Everyone's talking about getting money off of exchanges. So I would expect DeFi to see some sort of activity, whether it be forming a bottom or, some sort of growth at this level as we move forward. Maybe we drop down to 40. Maybe we dip down into, 39, 38 billion TVL. But as it stands right now, a lot of the washout is done. We still have contagion. We still have issues. We still have overhang around us. But most of the forced selling, most of the confusion, most of the sadness, most of the despair is behind us. And everyone will eventually, sit in that, but we'll walk ourselves and work our way selves out of those feelings and that sentiment. And eventually things will pick back up. Trust will grow, opportunity will present itself, and DeFi should stand to gain a lot of future growth as applications get better, as knowledge continues, as customers realize that DeFi is really where they can get safety and security in the crypto landscape without having to trust a third party. So, Ethereum, DeFi, as we move into the realm, of course, as we can see, small one-day changes, of course, not encompassing all of them, but, some 2% growth on some of these smaller ones in the hundreds of millions, and a 1% growth for 5 billion, in Lido, which means that a lot of people are staking. That's good. Liquidity and supply leaving the market whenever you stake. So that's a positive sign. And definitely MakerDAO, and Uniswap, we definitely want to see those utilized. It's, these are definitely big three. You can definitely include Aave as well, but definitely big three right here that you want to see continue to grow. Now, looking at Polygon, we can see Polygon and Arbitrum very similar in terms of, market structure, but, again, Arbitrum looking very strong, some great bottoming growth here across Aave, Sushi, Synapse, Uniswap, and GMX. And then, of course, looking at BSC, with CZ, making waves and staying in the media, we have some big changes of DPL on PancakeSwap. So I do wonder if that's a bit of fallout from, a bit of a Monday fallout from the FTX and SBF, debacle, as it's a very, unusual compared to the rest. So we'll have to continue to monitor that. But BSC, sitting at support right now, we definitely want to see that hold, the mid 4 billion, else we'll probably see 3 billion TVL. And looking at Solana, of course, the most heaviest beaten down assets, recently due to FTX and Alameda and SBF's kind of centralization of power within Solana. What I mean by this is that they invested in a lot of projects. They had Solana sitting next to them in the Bahamas. They had a lean team, meaning many of their confidants were working across many Solana projects. So with the exit of SBF and FTX and Alameda, who's running these projects? And of course, that's a big question right now. So Solana TVL dropped massively from, it was at $1 billion as we headed into October, huge dip under 1 billion. And now we're 325 million. So we're 30% of what it was, a month and a half ago, actually about 1 month ago. We're 30% of that now. And we're back to the lows that we were at back in April and the summer. We're actually higher summer 2021. So we're below the DeFi summer of 2021 for Solana, and things are not looking very good. So until we hear more news on Solana, until we hear something from them, Solana is definitely going to continue to take a hit and get beaten down. It's very similar to the Phantom situation. Once Andre left, everyone started to abandon, and now Solana has less TVL than Phantom. And I have a feeling that Solana will end up becoming a Phantom blockchain unless someone steps in, and I mean that Phantom PH for Phantom blockchain. So, DeFi TVL and activity definitely taking a hit, but has an opportunity here to recover. And this is where you would expect a recovery right around 40 to 41 billion TVL. If it does not recover here, we may end up slipping into 20 to 30 billion TVL before we know it. So looking at NFTs, we can see, kind of mirror to DeFi, what's going on in terms of an alternative asset landscape. We can see that Ethereum NFTs still taking the bulk of trading volume. But interestingly enough, what I mentioned about Solana, we have a huge, massive volume of UTs. We have a massive amount of sales. We have a massive amount of traders. Also DeGod. So very similar founders on the project. I believe Frank from DeGods founded both projects. It's very interesting to see these trading hands. This could be because people are getting rid of assets, on Solana. So we're seeing increased trading activity as they change hands. But of course, for every seller, there is a buyer. So there is over $1 million worth of activity just between DeGods and UTs in the past day for on the Solana blockchain. So that'll be something interesting to keep up with. The Solana NFT landscape was growing quite rapidly prior to the entire debacle that we find ourselves in. So it'll be very interesting to see if Solana NFTs can somehow come back in vogue, whereas Solana TVL and DeFi is on the out. So very interesting there. But when we look at ETH NFT volume, the largest collections are down in a big way. Even though this is doing 200K, this dropped 26%. This was doing over $1 million worth of volume per day. And so, of course, it's definitely been helped out by Mutant Ape Yacht Club, but, other deeds, ENS, Art Blocks, Azuki, a lot of NFTs are down, and overall volume is slightly down as well. Our top marketplaces, of course, still OpenSea, crushing other marketplaces in volume. But again, like I said before, Magic Eden on Solana, although big drop in trades and volume, still doing $20 million in volume, meaning it's the second largest exchange for NFTs, and it is Solana based. So again, Solana NFTs, I'm not saying invest in them. I'm not saying you should actively be in that market, but very interesting to see how they come out of this debacle, because like I said, DeFi TVL is decreasing, overall NFT volume is decreasing, and Magic Eden is still the second largest NFT marketplace. Although it's down 20% in volume for the week, it's still doing volume, which is quite surprising in this landscape. So looking at exactly what is going on in the market, we have U.S. equities trying to piece together exactly what's going on with on-chain activity to what's going on in terms of real-world finance. We have equities that do not seem to want to weaken. Now, if we kind of just look at this chart and say, okay, we've got support here. We bounced on support this morning. We've got resistance here, just above 4K. We've got magic number 4,100 floating up here. We've got kind of two targets. Can we make it? Now, the first thing that I want to look at, in terms of that thought, is moving to DXY, which is the dollar index. Now, the dollar index is relatively inverse risk. So if equities are going up, dollar index is going down. As you can see here, equities are going up, dollar index is going down. Dollar index is probably going to find support, just under 106, right when it meets the 1-day 200 moving average, which is, should be right around, 105.5. If it bounces at the current level, I would expect risk to, end up, coming back down a little bit, maybe to, the support that it was at this morning, support that is yet to be tested, which was previously resistance during late October. So if DXY ends up moving higher, potentially maybe here would be a good start, back to 108, then equities would end up falling probably back to 3,900. And then if DXY ends up falling back down here, then you can see equities having another boost higher. So I'm expecting a bit of a dance between equities and the dollar index as we move forward without any sort of major information from the Fed or the government. We don't have really any data this week. And the only, kind of whispers we're getting are from the Fed in regard to the next basis point hike, which will come towards the end of November, which is expected to be 50 basis points, which is not the ending of, it's not tapering, and it's not a pivot, but it's definitely a positive in terms of the Fed getting closer to its job being done. So if you're thinking in that direction, then we have a lull in market news, which means that risk could have a bit of a chance to have a good boost. So if we have a small bounce here, a couple days, then equities maybe pull back, and we have this range to play in, 39.50 to 39.10. And then, depending on how we survive that, maybe Tuesday or Wednesday, we head higher. We could also head higher from here, but, look how overextended we are. And typically, it's very rare that we continue to boost higher, although we have done it in mid-October. So basically, you're either, entering here on a move higher, or you're setting bids around 39.60 or 39.10 to then find a move higher. Now, this is kind of based on the DXY, but with an absence of market data, then we have to look for where we might find strength and weakness. If we actually zoom in on the 1 hour, we're starting to form, we kind of have these tweezer bottoms, and typically this will signal a move higher, but we have to firmly break this 40-10 level. So if we're looking at it on the micro scale, this is the level that you have to break, and you have to flip this and move higher. And if you end up coming down here, then you have to firmly tap here, else you'll just end up popping. So you're in a very precarious position because equities have already moved higher, but upside does look likely based on the DXY trend. It's just what happens in the short term before we have that move. And of course, the expectation is either we move higher, either we dip here and move higher, or we dip here and move higher. So a really good way to play it is if you feel like taking the risk on now, then you enter here. If you feel like being a little bit risk averse, you set bids at 39.60. If you feel like being much less risk averse, then you set bids at 39.10, maybe 39.20, just to catch any potential wick or very quick action here. In my opinion, it does look, very bullish for equities, considering we're surviving above what I consider to be very key resistance, which is the 39.50 to 39.10 level. And we have basically our resistance, our next set of resistance, if you're thinking bullish, around 40.70 and around 4100. So this is kind of we have our mini range here. We've got our high and we've got our low. Typically you want to sell the high and you want to buy the low. But we have our mid-term outlook here. There's no exact clear vision. This is a Monday after a boost. We did not sell off. We are holding the level, but we are starting to form what I would consider to be a potentially precarious formation up top. Now, we definitely want to survive this POC, and we definitely want to survive 15-minute 200-day moving average. So we'll look to see how it reacts at those price levels when they come. Looking at Bitcoin in comparison, typically this has been following equities, and we've been using equities as a weather vane for crypto, but we can't really use it. There is some correlation here, but not a whole lot. I would say based on the contagion being more or less over. There's of course plenty of overhang that could still push Bitcoin down surprisingly, or pull it up based on any sort of news. And we should continue to see some sort of correlation with equities, but for right now we're stuck in this little cruddy range where the high is 17.6. and the low is 15.7. So about a $900 range. Of course, you're probably going to want to sell anything here, and you're probably going to want to buy anything here until we have a confirmed break in either direction. Of course, the 200-day moving average or on the 1 hour is going to sync up with resistance. And of course, support has been tapped twice, and we're sitting in the center of the range. We're also in what appears to be a bit of a symmetrical triangle. Not exactly symmetrical, I should say. Bit of a ugly wedge. But typically these wind up breaking lower, unfortunately. Typically these end up continuing in the same direction. Doesn't have to be. I'm just kind of pointing this formation out just for, kind of a trend purpose. You're going to need to break above this trend. And that's why we kind of draw these, is just because, the range gets a little bit higher and compressed with every action. So, maybe you end up making it here, and then you, why is this not going? So maybe you go here, and then 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 finally you break up or down, and it takes you, 2 or 3 days to do that. So it's something to watch out for. I have a feeling that, the volatility is definitely disappeared for a little bit. We had all of this crazy price action to the downside. Now we're just going to ping pong around a little bit until another catalyst comes. For Ethereum, a little bit more sexy. We have 1340 as resistance. We have 1150 as supports. It's nearly in the same exact formation as Bitcoin was, in the previous pane. We have, pretty much the exact same formation. Every move is getting compressed. So maybe we head here, and then we either head up or we head down. And I have a feeling that up or down is going to depend on what equities end up doing. See how, considering equities are equally compressed, not equally compressed, that the range is, much tighter, and we don't have, the formation that we did previously, but we can kind of draw this. So this, to me, in terms of symmetrical formation, does seem like it may want to continue higher. So what we'll watch out for is, for this to hold 3977 number. And if we can get a bounce off of here, we can hold here, and we can bounce up to the 40K level, or, 10 level, 4015. Then things are going to be looking really good. And maybe Bitcoin and Ethereum have a chance to move higher. Alternatively, if this ends up, maybe we end up bouncing here, but we can't break higher. So we end up heading here, and then we end up heading here for potentially another break, which would bring us into Tuesday or Wednesday, which we talked about before. Then in that case, then I'm probably going to expect Bitcoin to end up moving here, potential deviation, and then we end up moving back higher, as I would expect, the 14K level to act as initial support. If we zoom out, we can see 11K is very strong. Then we can also see that the low 14K area. So we, a lot of trading here, a lot of trading here. That was that top in the 19. And then of course we have a very heavy trading range that we traded in, throughout 19, throughout 17, and throughout 20. So those are really exactly where I would expect everything to end up. Oh, it looks like I ended up actually deleted that. And, we have our range levels here. So what I'm expecting is Bitcoin to obey the range. We have center of the range. It's probably going to bounce here near the VWAP. We have to break up. We have to break above this, flip this to support to end up heading higher. And I have a feeling it's going to depend on equities, which, looking here, do look pretty strong. I'm not shorting this. I'm not exactly wanting to long it yet. But it does look a lot more positive than negative, in my opinion. And this formation does look a little bit more sexy than not. And if you are of this mindset, then you're probably of the mindset that crypto will find some sort of recovery, at least back to the top of the range, if equities end up continuing higher. So that is your full DeFi update, brought to you by the Defiant and Sun Galaxy, where we covered NFTs, DeFi, total value locked, centralized assets and TradeFi, as well as Bitcoin, Ethereum, and where assets are moving and shaking. Good luck to everyone trading this week and assessing the information. We'll come at you next week with a new update on, of course, everything around FTX and the crypto market, along with everything around DeFi and NFTs. Good luck, happy trading, and enjoy the markets.